All right, welcome to another high value conversation. This morning we have Lawless Turner, real estate agent, multifamily investing expert. He's a real estate agent that works with investors, but also sells houses to people who have the first time home buyers and stuff like that. But yeah, okay, cool. I think it says you joining. We're gonna be specific and talking about. Oh, nice. Lawless. Doing good,
Hey,
sir.
what's
You're
up,
doing
Mark? How
good,
you
doing
feeling, my
good.
brother?
I was just telling everybody in the intro that we're going to be talking about multifamily investing and like
Awesome.
multifamily real estate and properties. It's great to have you on again. Thank you for coming back, my brother.
Oh man, glad to be back. It's an exciting week. To come back on the heels of the Martin Luther King weekend to be back in New Orleans and just to get started this year, man. And just keep building some wealth for our community. So
No,
I'm
man,
I'm,
I'm,
I'm
I'm happy
happy to
that we
be
can
back.
dive into the topic too. I know last time we kind of touched on real estate, kind of, in general, but I think this time we're gonna have a great call, kind of going a little bit into the specifics. And I want to tell you now, if we
Hmm.
get a little too nitty gritty, and you find yourself like, oh man, like that's a little confusing, don't worry. You can always rewatch the video. It'll be in my reels, and we'll get like into the details that you can kind of go over a couple of times. So, Lois, tell me about the event that you went to this past weekend. I know you were talking about, we discussed your friend Julian. He's been doing some great things in the multifamily space and teaching people how to invest. I've seen some of your posts. It looked like it had a nice turnout, which really to kind of move
Hmm.
forward into taking the first steps into really getting their properties, and some people getting more than one. How was that event?
Oh, it was an incredible event. There was celebrity guest speakers there. There was a lot of knowledge, a lot of information from taxes, avoid preparation, as well as tax avoidance, which is very important. Um, as far as accumulating wealth, investing in stocks, learning how to sell stock options. Um, there was a lot of folks, man, there. Louisiana was in the house, so you had B. Anthony Kimball talking about the back to block, the buyback Baton Rouge fund. Savitra Wilson spoke about she raised $50 million in tech. Um, it was just a lot of people. That Dr. Boyce Watkins was there, just speaking about the Black Business School that he has. So it was really, really, really enjoyable. And it was great to just be with a group of folks that look like us, that are building wealth in their communities all around the United States. So I was inspired, motivated, and just back home in New Orleans, ready to continue to do this work
And I
that
hear
that
that.
I've been assigned to
So
do. So.
let's today kind of just go kind of step by step. And like I said in the intro, if you want to rewatch this, it'll be very helpful for you. The concept we're going to be talking about today is being able to collect rents on a property. That type of property is going to be a multifamily property, because the term multifamily implies that there's more than one living unit in that particular house. And it's beneficial in the long run, because some people, when they first get started, get a multifamily property under contract, move into one side, rent out the other side, and then eventually are able to move out of their side and then have two tenants in one property, and that cash flow able to come to them. What I mean cash flow is when you own a rental property, most of the time you're going to have a mortgage on it, or you're going to have some type of financing attached to that house. That financing is going to have a payment back to it that's going to, over time, pay down that mortgage balance. In this business, what you do is you make your rent higher than your mortgage payment. So you have some on top that's for you. If I have a piece of property and I rent it for $1,000, but my mortgage payment is only $700, $300 is going to be what we consider cash flow. So I'm building my wealth in two ways. I have money coming to me from that property. And then also, as we talked about last time, equity, the space between what the house is worth and what we owe on it continues to grow as the payments get made. The balance of what I owe goes away. And so the space between what I still owe on my debt and what that house could sell for is my profit spread of what, if I sold that house today, would be my wealth. The good thing about this is there's something called net worth, how much you are worth financially, your overall net worth, what you owe in debt versus what you own in assets. As that mortgage payment continues to go down, your net worth grows based on how much that equity is. And so we want to kind of go over today how you can get a multifamily property or a rental property and be able to start getting cash flow as well as building equity. And I want to just start off by saying, Lawless, what would be your first step when you're like, okay, I've listened to Mark and Lawless. I really feel like this is possible. What do I do now? What would be the first step a person would take if they really want to start to try and acquire multifamily real estate?
Well, if you want to, the first thing you want to do is you want to get pre-approved. You want to, make sure that, you know, you filed your taxes for the last, at least 2 years. Um, and basically you want to have a credit score of, 640 and above. So you want to make sure that your financial house is in order. And then you go to a mortgage lender, a mortgage broker, or a bank, and basically you get pre-approved.
Pre-approved, but
So check this. You want to get
yes, sir.
pre-approved for a mortgage, um, and it's a lot easier than you think. In fact, when you buy more multifamily property, the incomes that you generate from the rents will help you get pre-approved for more property. So it's a lot easier to get approved for a multifamily house than it is for a single family house. Because when you buy a multifamily house, actually the bank is going to um, include the amount of money you get from rent and then add that to your income that you make, either through having a job, so through your W-2 pay if you're a W-2 employee, or if you're self-employed, they're going to add that rent that um, you're about to buy. Because an investment, when you're an investor, you're buying income. So they're gonna calculate that income from that multifamily house on top of the income that you already make per year. So actually, it's a lot easier to buy a multifamily property than it is a single family property, which is why it's one of the best ways to accumulate wealth in America, by increasing cash flow as well as the equity over time. So, but yeah, you want to go to a mortgage lender, through a bank or through a broker. And interest rates, don't be afraid of interest rates. You can always date the rate and
So
marry
we have a
the
here. Someone
property.
says,
So
so the first one is the most difficult, but the every next one is easier.
yes, I think the first one is the most difficult, because you're really, when you're finding your first multifamily property, you think you got a deal usually the first time you see a property, because you're trying to calculate the rents. Not always. Not always. You have to, evaluate the price, and how much income you're going to get based on the price of the property. Also, when you buy your first multifamily property, it's harder because you may not have dealt with people in that way as a landlord tenant relationship. So those relationships can be challenging sometimes for the first purchase. Um, Usually in your first purchase, you're managing the property yourself, but over time, as you accumulate properties, you want to hire a property manager so that you can have some distance between yourself and your asset, so that your income can really become passive. That's very important. But yeah, usually the first property is going to be your most difficult one, because it's going to be the property
Mm.
that you learn the most on.
So I think you
But
I think you made a good point though
real
too,
estate,
because that you're saying that the second half of the house actually helps you. So it might be more difficult to process, but in what you were describing, you were saying that the rents from one side, or the projected rents from one side, actually help you to qualify because that they see that as potential future income to help you to get approved, correct?
Correct. Which is why it's a lot. I think the best decision someone can do if they're a first time home buyer is to buy a multifamily property first. That's what I did. And at the time, I worked at a government job. I worked at the Louisiana Department of Economic Development. Um, and shout out to LED. But basically, yeah, they're gonna basically calculate how much you're gonna get in rental income on top of the income you're already making from your job. So you want to keep that in mind. But I think buying the first property is the most challenging one because that's the
Yeah.
property you're gonna learn the most on. You're gonna need to have a list of contractors, and so first starting out, you may not have a plumber or an electrician or a handy person to help you out. So, yeah, it's the most
Yeah.
challenging, but it gets
So
it gets a
so
lot
let's
better from there.
so we would say the first step is kind of find the money. And I think that's true because a lot of people,
Right.
how can I put this, have that as their roadblock. So let's say you don't qualify, you don't get pre-approved, you don't have your financial house in order. What is another option that a person could use to kind of overcome step one, which is get the
One aspect outside of a traditional lending source is a hard money lender. So a hard money lender, and also private lender. So in finance, as when you're trying to do a deal, you want to go either with a private lender, a traditional bank, or a hard money lender. And in fact, you can use all three depending on the deal, which is why, in real estate, you really have to have an abundant mindset, which is why I'm wearing this hoodie, because, there's money all around us. We just
Mm.
have to put it together like a puzzle. So if you don't have good credit, if you don't have that much reserves in the bank, you want to go to a hard money lender. Hard money lender is going to charge you a interest rate a lot higher than a traditional bank, and so they're looking at the deal and the deal only. So usually with a hard money lender, you're gonna have to put up a lot more money in the down, as far as having collateral, 25%. So look at least having 25% if you're going to go through with a hard money lender. But if you're going to go through a traditional bank, first time home buyer, you're usually going to use an FHA loan. But if you're not going to go through a traditional bank, you want to have more collateral, 25%, to use a hard money lender. Now you could use a private lender, and this is someone who has, incomes, or maybe they have a lot of money. It could be a relative or a friend or someone in your sphere of influence that you could um, borrow money from at a certain percentage point, use that as collateral, coupled with a hard money lender to buy a purchase to purchase an acquired property. I would encourage you to buy a distressed property to renovate and to force appreciation, and then refinance with a traditional bank later on, and then pay back the private lender and the hard money lender, and then you can acquire asset. Really, just using other people's money, but that's really getting into the specifics of real estate development. But you can use that same puzzle buying multifamily properties. Uh, and sky is the view, not the limit. So you could buy hotels that way too. You just got to understand how to put the
You make a good
finances
point
together to make
because I see some people
purchase.
who were on yesterday, and like somebody just
Mm-hmm.
said just now, the bird method that you talked about last time. But I had a conversation yesterday
Mm-hmm.
with Logan. His name is Logan. He does real estate up
Mm-hmm.
here in Tulsa, and we went over the same topic in the beginning. And I want people to hear the consistency in the fact that you can get a hard money lender, you can get private finance, and they do have a percent, but there's 100% hard money lenders out there, private lenders out there, where it would be 100% of the
Mm-hmm.
transaction based on the profit percentage on the back end of based on the deal. So the thing I want to say here
Right.
that you actually brought this up last time, the first point, but we brought both these points up yesterday. One, you don't need a license to be able to buy this house, or even when you get ready to sell it. You don't have to have a real estate license to.
No, not at
You don't need a
all.
real
You
estate
don't have to have a real estate
license to
license.
sell or buy your own property. You only need one if you're going to play the middleman between two other people doing the deal, kind of be that fiduciary to make sure they're both following the laws and that the transaction is legal and the transfer of ownership is accurate. But you don't need a license to do your own deal. The second thing is that when it comes to acquiring your financing, there are many different ways that you can do it. You just have to be willing to have the conversation. And then when we talk about being based on the deal, if you keep listening, we're going to talk about how to look at a deal, how to analyze a deal. But once you have the right property and there is a profit percentage in that property, when you bring it to a hard money lender, or you bring it to a private lender, or you bring it to a relative, or you even go to the bank, they're going to look at, the bank's going to look at your personal finance, but hard money, private money, and when you're trying to get creative financing, the profit potential of the deal is what the people are going to base their decision on to give you the money, not you. So that's how you overcome the barrier of, man, I don't have enough money. I don't really qualify. I don't really have good credit. Cool. Now we switch to not me, but the house. I want to do real estate with this house. I don't have the money to do this house, but look, there's profit here for both of us if you lend me the money and my ability to pay you your money back over time or on sale. When the person can see that guaranteed off the numbers, guaranteed off the location, guaranteed off the sales in the area, then they'll approve and they'll give you that money because they can see, as a seasoned investor themselves, probably that's going to be successful. You know what I mean?
Absolutely. Yeah, your
Mm-hmm.
goal is to have the vision, right? And then to manage and to steward that vision, right? You know, I like the word steward because really, it's not our resource really. We're just moving energy, right? And it really takes a community, right? We don't do this by ourselves, but you might have the vision that this property right here, is distressed, it's blighted, and what we're gonna do is we're gonna recreate that, from blighted distress to value. Like we're actually creating value in our community. We're rebuilding our community. So it takes community to rebuild community. You may not have the money, but you can find the money from private lenders, hard money lenders. There's some hard money lenders, like Mark just said, they're looking at the deal. They're not looking at your credit score. They're not looking at things like that. That's getting into sophisticated development, but it's not complicated. It's not rocket
And
science. It's
life,
math,
like
right?
you
And
you
so
don't know because you haven't switched over to a real estate mentality, but you're here now, so you're taking the first steps, right? The next step is to start
right,
talking to people in your circle and find out. And I'll tell you another thing that's really going to surprise you
mm-hmm.
is people are doing real estate around you. You just don't know because you're not talking about real estate. When they come to the Saints game, or
Right,
they come see you, to watch the basketball game, or they come hang out at your house, they don't talk to you about it because they don't know that you know how to have the conversation. But there are people that you're related to. There's people that are friends of your relatives, and they own property already, and they have money that they will lend you to do deals. They just don't know that you're in the business. So once you start having those conversations, when you start asking, hey, I'm thinking to get into real estate, but I don't have the money, you're gonna actually bump into a relative, or you're gonna go to one of these real estate investing meetings. Like you said, there's meetings down in New Orleans that you were telling me about, a
Maria, the Maria,
real estate investment association. So you can Google that. You can see when their meeting is. I remember the ones in Oklahoma that I used to go to, like in 2012. It was like $20 to come, 200 for the year. But I mean,
yeah,
like, that's the best $20 you spend.
right,
You spend more money on that in your food for the day, if for lunch and dinner in the same day.
right,
So spending that $20 to go to that meeting and sitting there and really just being in a room of people that are really trying to do this, you'll meet people.
mm-hmm.
So we have the money part kind of taken care of. You said to get pre-approved. You got your private money. You got your hard money. Like, so let's say the money part is secure, right? I know where I can try and get the money for this. Now I want to try and contact agents. So I've been coming to these calls. I've been talking to Mark. I've been talking to Lawless. I'm going to contact Lawless because I'm in the New Orleans area. And I know I'm pre-approved. I know I have the money. I want to try and invest in multifamily property. When they contact you, what's next? How are you going to talk to them? Because I think one thing that people get afraid of is feeling stupid, right? So I used to have that when I first got into real estate. I had listened to some books. I had read some books. I had been to a couple of the RIA meetings, but now it was time for me to like really take action and call a real estate agent. And there was a fear there because I was uncertain, you know, of what I was going to do, even though I kind of comprehended the concept, right? So the first thing I want people to, first thing was money. The second thing I want people to do is, you know, don't be afraid to have those enlightening conversations. The person's not going to look at you, you know, like you're stupid or get off my line just because, you know, you might misstep in some of your phrasing or you might say something that's confusing, you know? So Lawless, a person calls you now, they have the money secured. What happens now?
You know, now we're looking for a deal, you know, and you can find a deal, you know, either on the market or off the market, right? So a lot of first-time investors might say, what do you mean by off-market deals? I mean that they're the better deals, right? You know, when something's on the market on the MLS, you know, everybody has access to view those listings. So those listings are going to be
Just for
a lot
clarification,
higher in
what's the
price.
MLS?
Uh, MLS is the multi-listing service, right? So that's what every realtor has access to, and then those properties on the MLS are redistributed to like realtor.com or zillow.com. So when you're Googling, property, those properties you see on the internet are what's
On
called on
the
the
market
market,
houses would be
right?
the ones that are on the multiple listing service, which means a person who wanted to sell their house contacted a real estate agent and said, I want to sell my house. The real estate agent said to them, okay, I'll put it on the multiple listing service because from there, I, as your listing agent, so there's listing agents and then there's buying agents. So I, as your listing agent, I'm going to put this house on the multiple listing service so all of the other real estate agents who are buying agents can start showing the house to people who have called them and say, I want to buy a house, right? So you can call a real estate agent and say, I want to buy a house. You can call a real estate agent and say, I want to sell a house. If you say you want to buy a house, they're going to say, okay, I'm going to represent you as your buying agent. I'm going to look for houses of the kind of houses that you want in the areas that you want to buy them in. The listing agents are the ones that say, okay, you want to sell your house? I'm going to put this out available where it can be searched, found, and seen for anyone who is trying to help someone buy a house. Those houses are on the market houses. Those are the ones that are on the market being the MLS, available to be seen for purchase. Off the market means someone wants to sell their house, but potentially they want to sell it on their own, right? For sale by owners, stick a sign in the front yard. I'm not going to call a real estate agent. I'm trying to sell it by myself. In addition to that, another type of off the market properties are people who are kind of going into foreclosure or houses that have been foreclosed upon or houses that are, abandoned or so those houses can be seen, but those are ones that you have to kind of go find. Now, some agents have access to those properties too, even though they're not listed because they're kind of aware of people who have gone into foreclosure but haven't listed their house. So there's off the market. I haven't declared I want to sell, but I probably need to sell. And then there's on the market. I've declared to sell and an agent is helping me sell it.
Right. But see, most real estate agents, when you call them, they're gonna, point you in the direction of on the market, property. But when you call me, because I'm an investor friendly realtor, I'm gonna break the game down to you, man. I mean, there are wholesalers out there that I partner with that I know that and if you're an investor, you want to have multiple people working for you, right? You want to have your wholesaler. You want to have someone who is a realtor, someone who's an investor-friendly realtor like myself, because I'm actually calling for sale by owners, and I'm calling, foreclosed listings, and I'm calling. I want to know where the deal is, regardless if it's on the market or off the market. Sometimes you might be riding in a certain neighborhood that is on the threshold of appreciation, and you want to look at signs for neighborhoods that appreciate, and you'll see a blighted property, or you'll see a distressed property, or you'll see a property that may have multiple tenants in it or multiple units, and is not on the market. I'll call the property owner. There are ways to find the property's owner name and phone number. There are tools to find those phone numbers. But yeah, if you're gonna call me, I'm gonna break the game down to you and really try to find you a deal, whether it's on the market, off the market. Because I started off in real estate as an investor. I'm still an investor, but I'm also an agent as well, a real estate agent as well. So you want to be really discerning about which real estate agent you call if you're a real estate investor. That's very, very important. And you also want to have a couple of wholesalers that you call, and that they have a specific role in the market, because they're finding deals that are not on the Zillows and the Realtor.com. So you really want to kind of broaden your view. Don't be so narrow-minded. Oh, I got to call a real estate agent. Yeah, well, call an investor-friendly real estate agent. Call a couple of different wholesalers, but you want to really start to develop your Rolodex, your community of people who
cool. Let's
help you reach your
quick. I want to
goal.
get like a little into the details. So we're gonna do a wholesaler. I seen you talk about appreciation, and then I seen somebody ask right now if we do deals in Baton Rouge. So start the Baton Rouge question. Do we do Baton Rouge? We were just talking about earlier in the beginning. You said you had somebody who has the Baton Rouge fund that you seen out at the event, and
Yeah,
connections
doing great work, man.
in
Anthony
Baton
Kimball.
Rouge if you want to reach out to us, if that's something, an area you want to work in. Wholesalers. A minute ago, we talked about going to real estate investor meetings. So at real estate investor meetings is where you can meet real estate friendly investors, real estate agents who are friendly to investors, but you can also meet wholesalers. Wholesalers, I want to define the term while we're using it. A wholesaler is somebody kind of, to be honest, like yourselves, or like someone who is on this call that we talked about, maybe didn't qualify for the money. A way that people get into the real estate investing business in the very beginning is by being what's called a wholesaler. A wholesaler is someone who cannot afford to rehab a house. They cannot afford to purchase a house completely and then rent it out. But what they can do is by talking to somebody in their family or finding somebody that they know, they can qualify to put an offer in on a piece of property in a way that they were going to buy it. But if they don't buy it, all they're going to do is be charged the earnest money, which is the money you kind of use to put the house on hold. If I'm going to make an offer on a property, $100,000, and then they say, okay, well, you're going to need $1,000 earnest money to hold this house till the 30 days when you're finally going to pay for it. I know I can't pay for it in 30 days, so I'm taking kind of $1,000 risk. But if I know that I have people who buy houses, if I'm connected to people who buy rental property, buy houses for rehab, then I know in those 30 days I'm going to be able to show him the deal or her the deal, and the house gets sold. So a wholesaler is the kind of person who contacts investors that are kind of like one level above them, right? We do rehabs, we do multifamily, we do renovations, and we do rentals. But there are people who are just getting started who are looking for as many houses as possible that are broken down, that need repair, that need work, that are off market, because they want to contact somebody like us and say, hey, I'll sell you my house that I have right here for, $5,000 more than I have it under contract for, because if you put rehab on it, it's going to be worth kind of 40, 50 more than that. So it's a beneficial deal for the investor on the second level, because they didn't have to look for the house, and it's a benefit for the wholesaler, because even though they can't make $50, $40, $30,000 by really fixing it all up, they can make a quick $4,000 or $5,000 by selling it to an investor a level above them. So having a wholesaler, now that you know what it is, someone who can bring you houses, and someone who says, hey, look at all these houses that I have, kind of trying to look and pick through one, because I've been trying to find one that I can sell to an investor, sell up. That's what a wholesaler is. And if you can go to a RIA meeting, you can meet a lot of people who are just getting started in the business who would be considered wholesalers, because they're trying to find as many houses as they can, because they want to sell up, turn the profit, and then be able to take the next step to the next level up. So that's a wholesaler. And one last thing I wanted to clarify, last two things. One, want appreciation. You said looking at a neighborhood that you can tell is going to appreciate. Appreciation term is the increase in value of properties in the neighborhood, or the increase in value on a particular house because you improved it and increased its value. Appreciation just means the value is increasing. So if we're looking at a neighborhood and we're trying to figure out where we could want to invest in, a good thing we want to look for is its ability to appreciate in that area. If we can find a house that's kind of in, you know, bad, it has bad HVAC, bad roof. The HVAC is the heating and cooling. If it has bad HVAC, bad roof, bad plumbing, but in this area, there are brand new houses being sold in this area, and they have the same square footage as our house. They have the same bedrooms as our house. They were kind of built in the same year as our house, but they've been improved and they've been resold. We can see that this neighborhood is going up in appreciation because the houses over here are selling at a good price point. And if we were to take this house that has all these things wrong with it and we were to fix those things, then our house could be worth what those houses are worth. What we want to try and do is we want to try and get that house fixed for as little under how much these houses are selling for, because these houses being sold that have appreciated are going to help us see the equity in our house after we fix it. We get it at a certain price, we fix it at a certain price, and now we're going to try and sell it up here. That's how we try and find good deals. That's what would qualify as a good deal. A good deal would be one we can find in an area where the values are going up, that this house is kind of a diamond in the rough. We find it, we can see the price that we need to pay, we can see the price we need to fix, and then we can see the profit potential between what we spent on it and where we could sell it. And one thing you said at the end was you talked about investor-friendly real estate agents. Find one. The way you find one is you have to call more than one. You already know Lawless is one, so you can go straight to him. But if you live in a different area, or if you live in a different state and you're watching right now, you just go to Zillow and you can pick out some names. You can Google real estate agents in my area, and then you just call a few. And when you call them, you ask, do you work with investors? You can say that straight out the gate. Do you work with investors? And they'll say, maybe. No, I have a few that I know. Or somebody else say, yeah, I've been working with investors for, the past 15 years. What are you looking for? That's how you start to find an investor-friendly real estate agent, someone who can understand what you're saying, and not only understand, but give you guidance the way that Lawless said that he would. So I just wanted to kind of go back over those few things right quick for clarification.
And maybe let me add a couple of things to that as well. If you're out of state and you're calling your local real estate agent, and you ask them a question, do you work with investors? Most real estate agents are going to say yes, right? Because they're going to want the business. What you really want to ask a question is like, well, can you run a rate of return on this property? What's the cap rate? What's the cap rate? Ask them questions like, ask him or her questions like that. What's the cash on cash return? If they can't figure it out, then
no, you're for sure. And as we go a little, we'll go
right. So you gotta have somebody who knows how to run the numbers, right? And so let's run these numbers. There's two universal languages out there. There's math and there's music. Okay, we don't have to speak you can speak Chinese. We could be speaking, Spanish, French, but matter of fact, I'll type up the numbers for you.
No.
You'll see. Numbers don't lie. And the same thing in the music world. When the note is hitting,
yep.
You're in tune, right? Because the music doesn't lie. So, when you want to find an investor-friendly agent, you want somebody who's willing to run the numbers, who has this particular mathematical equation that they're looking through. Do they have an investment tool, an analysis tool that they can email you in the form of an Excel spreadsheet to kind of help you take the emotions out of it and just look at the numbers? That's really important. Going back to appreciation, I want to say briefly, buy the worst house on the best block. It's that simple, or you're in a neighborhood and you see that there's some new construction going on in the neighborhood. You see that there's some some rehabs going
Mhm.
on, some new paint on the house, that's what I'm looking for. We want to find properties that, in my opinion, I like finding properties that are a little bit distressed, that we could, do some repairs in the kitchen or the bathroom, some minor repairs, and then gain the appreciation out of it. So yeah,
All
buy the
right, so let's go to
worst house on the
step
on the
three.
best block.
So step one, we find where we're going to be able to get our money. Step two, we contact a real estate agent, an investor-friendly real estate agent that's going to help us look for houses. Now, if they don't have one exactly like you, or they're not contacting somebody like me who can really break down what a good deal is, um, everyone who's paying attention right now, just come back and rewatch this video because we're going to get like real, you know? Let's talk about what makes a good deal, because we've got the money, we got the agent to find a property. We're trying to find the, like you said, the worst house on the best block, but we're trying to do the numbers, right? We cap rate, you said
Mm-hmm.
cash on cash return, you said ROI. Let's take the time right now. We're going to go slow. We're going to be specific. We ain't in a rush. Let's talk about these numbers and how we can tell what is a good deal.
Okay. Absolutely. So I use the 1% rule, which is, if that's one prism I look at. If a property is, say, worth $300,000, I needed to make at least $3,000 in rent. So that's, check number one. Two, I want to make sure that I have, what's the after renovation value on this property. If it's, 25 to 30%, increase in equity after I purchase and renovate it, yeah, that's a go, right? Because then we can borrow from that and buy more property. Um, Cap rates, if it's looking like 10%, great, let's go for it. You know, um, Capitalization rate, the way you get into a capitalization rate is you take the asset, however much it costs you to purchase at that time, and you divide that by how much the profit is annually, right? So if it's $3,000 that you're getting in rent, you're paying $1,500 in a mortgage, you get $1,500 in profit a month. Multiply that by 12, and divide that by the price of the property, and that's what's
And you
called
say
your
you want
capitalization
10.
rate. Okay. Yeah, I like things to be around 10%, but or more, but that can be hard depending on if you're in a neighborhood that is um I would call um sort of the values of that property, the values of those homes are really high. Like, for example, if you're like in a very expensive market, when you're in an expensive market, it's harder to get higher cap rates, which is why you see a lot of folks who buy multifamily properties tend to buy in like neighborhoods that are distressed. Some of us might call it the hood. Well, the hood got the money, and so they have higher cap rates, right? And so that's why multifamily is lucrative, because you're having higher cap rates, you're having
So let's
higher cash on
reiterate.
cash returns.
So you said straight out the gate, 1% rule. So if we get in the house, let's just break it back to 100,000. So let's say we get $100,000 house. We're looking for it to at least produce a profit of $1,000 to us each month once we look at how we're renting it out. Now, one thing I can say is, if you go to, I think it was a website I used before, it's called rent.com. So when I would use rent.com, I could type in an address, and it would show me based on that area how much the rents are kind of in that area. So that's one way you can look at your purchase price versus what the potential rents were going to be. So you don't have to wait to start collecting rents or wait to see what somebody agrees to in a rent to be able to know if you're going to be able to get that 1%. You can see what houses are renting for in a particular area, that kind of assessment. Then you said, when it comes to, what was the second one you used? Oh, your 30 equity, right? So we, like I was telling you
Equity, yeah.
before, we want to get the house, repair the house, and then see how much it can sell for. So let's say houses in a particular area are selling for $100,000. Then we find a house in one of these neighborhoods where it's kind of on sale because no one's bought it, some things are wrong with it. It's listed for $60,000. The bank has foreclosed on it. The bank owns it now, and the bank has it on its website saying, "Hey, these are some properties that we've seized. This one is for $60,000." And we can then look at the property condition. We can get an inspector to come with us. We can get an appraiser to come with us, or we can ask our real estate agent if he has a property condition report on that property or some data on that house. Then they can say, these are the repairs that need to be done. I can calculate up the cost of those repairs. Let's say we got it for 60. It's only going to cost us about 10 to fix it up. Now we can see that there's going to be $100,000 if we sell it. That 30,000, that'll be our 30% that we're kind of looking for. Now, those are some solid numbers to help you understand what we're talking about, but that's kind of what you're looking for, right? I want to, if I'm going to spend the time to get this house, call contractors, bring them over, manage them, make sure I'm making contracts with them, making sure I'm doing lien waivers, making sure that they're not messing anything up in the house, and I have to manage that process. And then after I've managed that process, now I have this house fixed up how I want to. When I go to sell it, I want my, payment back from my time, energy, and effort that was making it worth it, right?
Absolutely, absolutely. We're buying income. We're buying income and we're buying equity. So that's what we're doing here. We are building
So
wealth,
that's where the profit is coming
right?
from, right? That 30%, that 1%,
Right,
that capitalization rate.
right,
So then you talked about cap rate, right? All these ways we're describing right now is what makes it worth it, and like where the money comes from. The money from creating that equity, it
right.
comes from the cash flow that you get off of the rents, and then you want to kind of see long term, what are you going to be able to make off those rents? So you said you want to be able to take the purchase price, and then you say you want to take go ahead, do it again, capitalization rate.
Yeah, and you want to make in cap rate, you want to have it at least be like 10%. So, but sometimes cap rates can be a lower in markets that are in expensive markets, but they're still cash flowing. So I don't want to be so hard on this. It has to be 10%, right? It can be less in more expensive markets, but usually a multifamily property are in neighborhoods that are a little bit more distressed, in areas you might consider the hood. But that's where you're going to get higher cash on cash returns and just cap rates in general. But yeah, I just want to say to my early investors, the ones that just starting out, don't be discouraged. When you first start out, when you make an offer on a property and you don't get it, don't worry. There's like plenty of fish in the sea. Like there's a lot of property, and I'm in New Orleans, right? I know a lot of people are, it's very expensive here. I get it. I'm from here. The home prices are like really, really high. Interest rates are really high. But when you have an eye and a vision for seeing value, the numbers, the numbers are sort of like, kind of relative, right, to the time and the moment, because the numbers are always going to increase. That's what real estate does. It always increases. But what we want to focus on
Yep.
is looking at in terms of percentages. Like we want to see, this price today as relative to
So,
what the price is tomorrow, right? Right. 15 years ago when I first bought my house, like I bought it for 192,000. Today is worth, somewhere between 450 and 500, right? Right. So the numbers, it just shifts. But what we're looking at is, are we getting a deal today? When you buy a real estate, when you're doing a real estate investment, you're making money on the purchase, right? You're making money day one. As soon as you buy it, you made money. That's how you want to look at the deal when you're doing real estate investing in multifamily properties. So I just want to be
yeah,
kind of
when you
specific
say, that's a
about that.
very good point you make. You make your profit when you buy. What we're describing is, once you have looked at the one, once you have done your calculations to find a deal that qualifies, right? So that's another thing. When you're looking at houses, you're gonna look at, you know, 50 houses to find, 10 that match your criteria, because all of them that you look at are not all going to make sense financially, be able to see
Right.
where you can make money off of it. That's why you see a lot of houses that are just sitting there. The reason why some people haven't done anything with that house is because once they ran the numbers, it wasn't going to be profitable, right? Yeah, it didn't make sense. It
It didn't
didn't
make
meet
sense.
some of these standards that we're giving you, right? So now you have those 10. Now you look at those 10, you have, all right, it meets the 1%. I can see where I'm going to make my 30%. I can see where the capitalization rate is going to be at 10%. This is a good deal, right? Because it's a good deal because I'm going to be able to make money off it. Now you're going to make offers. Other people are going to be making offers on that house too, because they did the same mathematics that you did and saw it's going to be a good deal. Now it's just a matter of who's going to be able to get it. But whoever gets it, because the numbers were right, when they spend, like I said, in that 100,000, when they spend that 60, right, they already know the 30 is going to come. They're going to get the 30% because they've already done the numbers. So when you say make a profit when you buy, or that we're buying money, I know I'm going to spend 60 on this house. I'm going to spend 10 to put it in, but it's all going to be worth it because I already saw where the 30 was going to come from, because I looked at the other sales in the area. I looked at the other houses that were selling. I made my house like that house. And so now I know when I sell it, it's gonna make me this amount of money. That's how I know I'm buying, I'm making a profit.
Mm-hmm. Absolutely, absolutely. You just have to change the way you look at property. Most people look at property like, I'm gonna move in and live here for 30 years, 20 years. Nah, not when you're a real estate investor, man. You're a steward. You're like, you're basically, and I like the word steward because it's an old word. It goes back to like ancient times of being like a farmer, right? Look at your property like your farm, you know. Look at, you know, you have multiple, you're responsible. You're the landlord. You have to maintain the property. You got to make sure the roof is there. You got to make sure there's, running water, So look at it. You're a steward of this land. You're the landlord. So you want to evaluate a property, make sure it makes sense for your energy, because this is your time. Our life is, fragile, and so you want to make sure that you're using your energy to invest it. You know, this is where it comes to, it doesn't make sense. It doesn't make sense, right? It doesn't make money. It doesn't make sense for for you to use your time, energy, your currency to really steward this property
I think
and those who live in
you
it,
make a good
right?
point
So,
about how we view property. I mean, you have about this about 2 weeks ago. Um, a lot of people post, being a first time home buyer, which is awesome, but it just goes to kind of champion the idea that we've been sold about what property is actually supposed to be. It's not supposed to be where we're trapped in a loan, right? So some people will call themselves a
no,
homeowner,
that's
and you're really a loan owner, right? Because as long as the
right.
bank still has your house tied to that mortgage, at any point, if you stop paying that money, they're going to take your home away from you. You don't own it, right? And so being able to flip the system upside down and saying, I'm just borrowing this money so that I can turn a profit, give the house to somebody else, but
Mm-hmm.
take the money that I made in between that transaction. Now you're starting to think like a little bit differently. And then even when it comes to your own home, if you say to yourself, okay, I'm going to buy this house, I'm going to get this loan, but I'm going to create additional streams of income that help me pay this mortgage down while I use the collateral, the equity in this house as collateral to get more properties. I'm using it as a tool now. It's like my vehicle to continue to build my wealth and increase my net worth. It's not just here for me to just sit here and keep paying you and paying you and pay you and like have a place to sleep. Like you can really turn it into a tool for your to be able to accomplish great
Mm-hmm.
financial goals.
Right.
And that's the mind shift that we're trying to help you understand. Like there are people who the things that we're talking to you about right now, are child's play. Like when me and Lawless, learned this stuff, we learned it like through our life as adults, going through reading, testing, going through all the steps that we're giving you. And as we're hitting these, different levels of knowledge, they're like epiphanies, like, oh my God, I could do this, I could do that, I could do that. And then you go to some meetings and stuff, and people own 100 houses. 300 properties. They've had, 50 houses transferred down to them in a trust from their grandma and grandpa. They've been doing this, right? So I want you to be able to see it more as something that is very, very possible for you, and not this huge pie in the sky, oh my God, how could I ever do that thing? No, it's with knowledge, with a network, with connections that you build deliberately, you can do these things and make it actually simple, because you've acquired the skill set, the knowledge, and you've been in and you've repeated the process. I mean, just imagine where you could be 2 years from now, a year from now. You could be, January 2024, and really have 2 or 3 properties. You have 12 more months if you really start doing things differently right now than you've been with the access to the information that we're giving you.
Right, right. I look at things in terms of consumption versus production, right? We have a lot of consumers. We're a consumer-based society, right? We consume, we buy things, right? And we consume them. But when you become a real estate investor, you're becoming a producer, right? You're transitioning from consumer to producer. When you have a producer-based mindset, then you can produce anything, right? I mean, you can produce cash. You can produce value. You become a maker. Not someone who just consumes. So when you purchase property, you want to look at it from a production standpoint. You're producing income, and that is what's going to create wealth. You're going to get a bag every month. That's what you want, a bag every month, and you want multiple bags every month. When you're most folks, they go to work, they work really, really hard, and we come from working class families, and then they buy that one house, and then they live in that one house their whole life, and then you're paying down this mortgage. Well, that's consumption. You're trading your time for money to stay in this one house. Well, you can become a producer. You can buy multiple properties, so that the money that you're going to produce from buying multiple properties will be a lot greater than the money you get from going to a job every day. And then you could actually retire early. You can start thinking about what you would do outside of working every day. Maybe you can chase that, dream of write that book that you always wanted to. Maybe you could, make that album if you're a musician. You can really know every day. You don't have to worry about, I have multiple incomes coming in from these properties that I own. And then you can literally start to, enjoy financial freedom, and really understand that here in the United States of America, man, it's really built for the owners. I just have to say that these United States of America, the senators and representatives and those who built the laws,
but like you said, well, like we said last time, though, the most beautiful part is that because of the Civil Rights Act, there is discrimination onto who can have access to ownership. The only block now is kind of going over today. Your understanding of how to use the system in a different way, how to use it the way that they're using it. Right. The new discrimination now is that we don't teach this in school. So with the system out here, for you to be able to own more property, borrow money, invest in stocks, start businesses, but because you don't understand your debt, you don't understand your credit, and you don't save any money because we've created the system to be debt-based, now you don't qualify to be able to participate in the system the way that we do. But once you do know, it's not inaccessible to you. And that's what we're describing here is an ability to understand that once you know the rules, then you get to play the game. As long as you don't know the rules, the game is shut off to you, not because you aren't smart enough to be able to participate, just because you don't know the rules to be able to get in. And that's against you. Mm-hmm. And once you read Me or Stay Broke, or read about real estate, watch some YouTube videos, the more you continuously educate yourself, the more the barriers start to break down. And then you realize that you can switch sides, so to speak, from to producer, right, like you were describing. So let's recap. We got money first, Then we have being able to contact your agent. Then we have an ability to analyze our property. So we found a good property, we got the property, they accepted our offer, and now we have to do the paperwork. What I want you to know is that you can understand these documents. I can remember the steps of fear that I went through, right? One was the fear of ignorance. That was getting the knowledge. Second was the fear of contacting the agent because I thought I wasn't smart enough to be able to talk to them. Past that one. Now we get to the third one. You got your offer accepted, and you're going to closing, right? Closing is where the title is transferred into your name. The deed is transferred. You get to have ownership of the property. And there's going to be documents there, right? There's going to be paperwork. There's going to be a sales contract. There's going to be your title insurance. There's going to be, all of the things that you have to fill out. Understand that this is not too complicated for you, right? I didn't think I knew what I was doing. I'm sure Laws was like, what is all this, right? But it's really that difficult. Half the time, they don't even really make you read it, which is the sad part. Is how some people get in trouble. I've heard people say, read the fine print. I've always been a believer of read all the print, and get those contracts beforehand. And not like they just surprise you with them when you get to closing. You get to review them, look over them before it's time to go. If you need help, talk to somebody who's, talk to me, talk to Lawless, like find somebody who's your friend, talk to somebody who's bought a house before. Even if you have your own home, just read the documentation so that you feel comfortable in your ability to be able to know that, you are not being told what this is by somebody, that you understand what it is. And do you have anything you want to say on paperwork? Because then I'm going to move to rehab and kind of rent stuff.
Well, I heard you. I just wanted to touch on a few
Yes.
things you said. Getting over the fears. Mindset is really key, right? I mean, we could share knowledge, skills, information. In fact, there's a lot of knowledge out there. We live in an information age. You can get knowledge on YouTube, lives, posts and reels these days. But really, the United States is, at the end of they say the home of the brave, right? The land of the free.
Yeah.
You got to be brave,
Yes,
man. Just do it. Don't think about it think about it, analyze it, but once you know, and just be brave,
Yeah.
And there's a lot of learning from doing. So, even when you feel like you may have made a mistake, there are no mistakes if you just keep doing, right? The first property you buy may not have the equity that it may not have the 25 to 30% equity that I'm talking about. It may have, 15% equity. That's still a win. You're still a lot better off than you were last year, right? You may, instead of paying $1,500 a month in rent, now you're getting $1,500 a month in rent, and you might have to pay $200, $300 on your first multifamily that you currently live in. You might have to start with an owner-occupied property, but be brave, learn by doing, and then go into that second one and that third one and that fourth one, and then really start to build your confidence on each property that you manage, that you buy and manage. But yeah, you got to soak up the knowledge and then get over those fears. I've heard someone say fear is false expectation as reality. That certain things are just false expectations. So go for it. Be brave. I just wanted to mention that because you spoke about
for sure. Because
that's very important.
When we describe these things, sometimes like people's analysis paralysis or their hesitation, like we forget that because we don't have it anymore. So it's like sometimes I stress that, and I always remember going through those different periods of hesitation and confusion. And just right quick, to show you how easy this can be, even sometimes we're describing this to you in the understand each step way, but there are people out here that sell what's called turnkey real estate. Turnkey real estate is a rental property that already has a tenant in it, but the landlord needs their cash. So the landlord will sell you their rental property that already has a tenant that's already cash flowing. just because they want the cash flow. I mean, so they want the cash now and to move on to maybe buy a property. So you can acquire a rental property sometimes by just buying it from somebody who's selling a tenant already in it, turnkey piece of real estate. And then you can hire what's called a property management company. Some real estate agents are property managers, but you can hire what's called a property management company. A property management company will take first month's rent and 10% of each of the next 11 months rent to run your property for you, collect the rents for you for that whole year. And they will contact the maintenance people, they will contact the plumber, they will contact the people that need to fix stuff at your house for you. You'll get the bill and then you can pay the bill back, but you didn't have to go over there and fix the toilet. You didn't have to go over there. You don't even have to talk to the tenant, right? So this can be even simpler than the way that we're giving it to you, but we're giving it to you, say you're starting out and you want to really get a property, fix it up, buy it, put a tenant in there, manage the tenant, sign yourself. That's a way to go. There's also another way to go that is available and actually a real thing where you can find turnkey rental properties that are already being rented, already kicking out cash flow, that property from another investor, hire a property management company, and now you have a self-sustaining rental. It's already got the tenant in there. It's already cash flow. It's already been collected by the property management company, and they're sending you, and you're all trying to do another house or working your job, and now you have two streams of income. So I just want to like make that known that there's levels to this.
Yes, there's definitely multiple levels to this, and you spoke about property management and then levels, and one thing I think about is, I mean, you can get to a point where you have 500 units, right? And that's a reality. It's not my reality currently, but and you don't need 500 units to live a happy life, right? You got to just know your number to live a happy life and just be fine with where you are.
500 units of multifamily real estate. What do you call 500 units of multifamily real estate?
A portfolio.
An apartment complex.
Yeah, definitely. You have apartment complexes, definitely.
No, for sure.
But you could also have hotels, right? I mean, you could have, that's rental property, is short-term.
You can have a rental property, and you can use Airbnb, especially in a place like New Orleans for tourism, right? Mardi Gras, Crawfish Festival, jazz. Like there's times of years people coming in town all the time for conventions and go to the casino and stuff. So you don't even sometimes need a tenant. Sometimes you can buy a rental property and then you can put it on Airbnb. Pretty much all the houses on Airbnb are rental properties that someone owns, that they bring people in, people book, day after day to come stay at their rental property, and they're making more than they would make on just a regular month's rent, because a regular month's rent might be, $1,000 a month, but you're on Airbnb and you're booking your house for $200 a night, and you have 30 days in a month that someone's booking out your piece of property. So there's multiple ways to do this.
Mm-hmm. Mm-hmm. Yeah, you just got to pick your lane, pick a niche, and become professional in that niche, and then you can really start to, enjoy different aspects of real estate. But this thing is not for the faint of heart. So there are going to be challenges along the way. So just pick your niche, whether it's short-term rental, whether it's apartment complexes, whether it's multifamily, whether it's hotel. The fundamentals are still there, that we're talking about, how to evaluate a deal, cash on cash return, cap rate, hiring a property manager. Yeah, it's all a real estate. It's a real estate of mind.
We're going to keep talking, but if you have any questions, just put them down there and we'll go ahead and answer them as we're going. All right, so let's get back.
And let me add this, and ask some questions, but I do have a stop soon, not immediately, but I do have some to have to do some management for my rental property.
That's cool.
But
let's do 5-10 more minutes and we'll hop off. Okay. Let's recap: money, agent, analyze deal under contract, Now I have my house. It's the day after closing. What am I doing now? I'm gonna rehab it, and then I'm gonna try and find a tenant, right? So can you give a little bit of experience in your rehab process,
Mm-hmm.
and then a little bit of experience on your finding tenant process, and we'll kind of wrap on that because that kind of gets us from no house to tenant cash flowing house.
Oh, absolutely. You want to have a list of folks who contractors who can fix certain things. And maybe you're buying a property that's, move-in ready to go. Great, that's ideal. But still, even if you bought that, you're gonna need a carpenter or a plumber or an electrician. And so you want to make sure that you have someone, unless you can do it yourself, that's fine as well. Um, but with all property, you're gonna have to maintain it. Uh, Again, if you're working with me, I provide you a list of professional service companies from HVAC to foundation to carpenters to anyone, plumbers, electricians. So you want to have that, and you want to make sure your property is safe and is of high quality for your tenants, right? Because you're providing housing, and that's a blessing, to be honest with you, to provide housing for someone. Now, to find a tenant, there's multiple ways to find a tenant. You can advertise your property. You can hire me as a real estate agent if you're here in Louisiana, or to list your property, or any other real estate agent for that matter. Or you can put it on Facebook Marketplace if you want to do it yourself. You can go on Craigslist if you want to, advertise yourself for your property. Um, and there are programs out there, government programs out there that help pay for the rent for their tenants. So you have HANO here in New Orleans, Housing Authority in New Orleans, but you have like Section 8 programs throughout the country. You have you even have programs to house the homeless here in New Orleans. You have Unity. I've done some property management for my clients who had tenants who were part of these programs. Um, and you evaluate the tenants based on if they can pay the rent, um, and on time, and you're a good judge of character, and because these are going to be your home. I don't believe in any form of discrimination, so I believe in just meeting people at face value, and just and really having those conversations to decide if this is the tenant that I want to go with. There are programs that out there that house first responders. You even have travel nurses, right? Travel nurses is a website that is a quasi short term, because the contracts are like 3 months, 6 months at a time, maybe not a full year. But there's some websites out there that you can take pictures of your property, post them online, and get you a travel nurse. So there's a million ways to get it. Choose wisely, and
We got a question.
become free,
Once
man,
Louisiana is a
financially free.
tenant friendly or
Mm-hmm.
landlord friendly state?
Louisiana is a landlord-friendly state. The laws here in Louisiana, there are other states like Cali and, jurisdictions like New York City or DC, Washington, DC, some of these major cities where it's more tenant-friendly, where, if a tenant doesn't pay the rent for sometimes up to a year, they cannot pay the rent up to 6 months, and the landlord got to get stuck with it because of certain parameters, that the government imposes. But here in Louisiana, it's mostly a landlord-friendly state. If the tenant breaks the contract for whatever reason, the landlord could initiate, an eviction or a 30-day notice. We don't want to go to evictions. That's like the last resort because it costs a lot of money, and honestly, it costs a lot of energy, like
Uh-huh.
currency, like your own personal, energy, because you gotta, go through that process. So you want to make sure that you're not stressed. Less stress the best. But if you have a tenant that breaches the contract in any way, and the contract, has certain stipulations like who can live in the property. If there's someone living in your property that's not on the contract, that's a breach of contract. You know, if they're not paying their rent on time, it's a breach of contract. But yeah, Louisiana is more of a landlord friendly state. You can give a 30-day notice, 45-day notice. You know, what works, you know, you have to know your tenant. I encourage having a conversation because we're dealing with people. This is a people business, right? This is not, you know, yeah, we talk numbers. We're making our numbers where we want to meet them and, you know, where we can be financially free. But we're dealing with people here, man. We're dealing with families. So you want to have a sense of empathy, you know, when you're having conversations, because you know, that could be you in that situation. It could be your mother, your father, your brother, your sister in that situation. So, yeah, even though this is a landlord friendly state, you know, you want to be real and keep it real. You know, with your people that's
All right,
living in
well,
your
man, I'm gonna let
houses.
you go. I want to thank everybody for being here. Thank you for coming today. Thank you for taking your time, giving us some of your valuable time to allow us to share some of our knowledge with you. Um, I did a
Yes,
call
sir.
yesterday with my good friend Logan. He's a real estate investor out here in Oklahoma and Tulsa. Me and Lawless did a call last week. They're all in my reels. There's so much knowledge in there. When you have the time, please go through and listen to that. There's so many gems that you can pick up. I'm doing a call tomorrow about insurance with my good friend Patrick. She's going to be talking about life insurance and kind of diving deep and kind of distilling some of the myths in that. That call is going to be at 1 instead of at 8:30. So if you want to join in, tap into that call kind of midday. That's going to be some really good knowledge. And so I just thank everybody for being here. Man, said want to holler at Purple Night. You know, my son Mark was on here. Patera was on here. I just want to thank everybody for coming and giving time. Love y'all. Really appreciate you. And we're going to be doing more of these. So please just continue to tap in. If you have questions, just write some down before you come. If you want to DM us any questions, hit us up. That's why we're here. My mom was, you know what I'm saying? Shout out Clay
Right.
Deasy. Appreciate you. You know what I mean? So,
and check out just one last shout out. You know, check out the Generational Wealth Conference next Martin Luther King's weekend, hosted by Julian Gordon.
definitely good guy.
A good brother, good spirit out here. You know, blessing us with this knowledge, his power. So check out the Generational Wealth Conference next year. And just connect, collaborate. You know, let's build wealth together as a family. Let's just become, you know, one of the biggest, you know, wealthiest families in the world.
Oh, yeah.
Shout out to Ash Cash. I love his energy. Abundance is your birthright, because you know we're really. I just want to say, you know, make that money. Don't let
And
that money make you, man. And just be you.
I was just saying, I was just telling them, just reach out to us. We're accessible. You know what I mean? Like, even though we're doing this call right now, like, hit us up anytime, man.
Yeah, absolutely, man. Share the real, man, with me on and I'll continue to push this knowledge to my community here in New Orleans and beyond. Each one teach one, man. Let's just continue to be a light in this world, man. So you know, much love to you, Mark. Thank you for doing this, man. You put me out here, man. You know,
And your
I'm
light
grateful
shining
for
bright,
that. So I
brother. Like,
appreciate you, Mark.
like I said, ever since I've been knowing you, man, you're just a brilliant brother, man. And it's it. We need to feel it. We need to have it. You know what I mean? So if I gotta pull it up out of you, I'm gonna come get it.
I'm here, brother. I ain't going, you know, it's
You
never
heard?
still the same. 504, you heard
I
me? All
love you too, man.
right, Mark. Love you, brother. Peace.